Should we move on to our next one, which is another, we'll call it drug, Starbucks with coffee?
Caffeine.
Caffeine, yes. Starbucks, they are in the restaurant industry as well. Much better situation on the short here. It's a 3.9%, 87% institutional owned. They do have a PE ratio kind of high, 37.5 versus 29.7. Price to sales, 2.7 versus 2.4. No price to book value. Price to cash flow, 20.1 versus 16.5. And disappointing, no PEG ratio here. I thought we'd have a PEG ratio, but we do not. Now, their earnings over the last year, they are down 30.2%. The industry up 2.2. The sales for Starbucks up 1.4, not quite as good as the industry, up 3.4. The 5-year earnings per share growth from the analysts is a negative 160%, negative 18 for the industry. We do say they pay a dividend, not too bad. It's a 2.9%. I like a 3% dividend or higher, so they're getting close to that area. However, their payout ratio is 103. Is a payout ratio versus 61 for the industry. Taking a look at the balance sheet, current ratio 0.8 versus 1.1. That's probably about our bottom minimum that we would accept. Unfortunately, no debt to equity. I think they have a lot of intangible assets on the balance sheet. We do see that the net profit margin is 7.2 versus 7.9. I thought that'd be higher based on what I pay for Starbucks every once in a while. And we do see return on equity a negative 34 versus a negative 474. Return on invested capital is better at 15.7. Free cash flow, $2.2 billion versus $2.9 billion. Well, I'm going to keep my fingers crossed here. Going forward, we'll find something that maybe this could be a buy.
And I was kind of looking to, I mean, the debt to equity obviously is going to be hit because they do have franchises and they have company-owned stores. Company-owned stores, many times they're likely not owning the real estate, so they have the lease obligations weighing negatively on the balance sheet.
They do have franchises?
They do have franchises, yeah. I think that's why sometimes you see like 3 within a quarter mile of one another.
That doesn't seem like a very smart business person. Like, well, I'll open another Starbucks down the block here.
Yeah, I'm going to be different from that. Right. I mean, sometimes I guess like, there's inside like a Vaughn's or something and there's one in that same parking lot. I'm like, I guess maybe that makes sense.
Well, in the Scripps Ranch, you have one in Vaughn's. Mm-hmm. You have one, I think, outside about maybe 300 yards away. And then one across the freeway, maybe a half mile away.
It's crazy. And, I've never understood their footprint. I mean, caffeine, I guess, is an addiction. So, I mean, they are profitable and they have good sales. So, I mean, hey.
I can't drive a half mile. I got to get it right now.
I got to drink mine and then I need another one when I get the next half mile. But looking at the numbers here for Starbucks, current price, $86.42. 52-week range, the low here, $75.50. The high, $117.46. I mean, this stock has essentially been dead money over the last 5 years. This is down about 2%. Over the last 1 year, down about 10%. Year to date, it's languished, down 5%. So definitely below what most of the stock market has been doing. The problem is going out to September 2026, I see estimated earnings per share here of $2.66. That's a problem because we get a target sell price at just $44.16. Wow. I was hoping with this stock languishing, maybe there'd be an opportunity. I've listened to the CEO, Brian Niccol, talk, and I really like what he's doing there from at least his words. I don't know the actions. We don't own Starbucks, but the big thing he wants to focus on, and get this, service.
Service. That's something you don't get a lot of today.
Mm-hmm. He wants to make the coffee shops a little bit more homey and again, wants to make people want to come into Starbucks.
Right. And I do see the analysts are not buying it yet. I do see it's actually down. It was like $2.98 90 days ago, so it's down about 10%. You said $2.66 now, and they're kind of all over the board. The low estimate is $2.31, the high is $3.31. Again, like you, I like the CEO, but we've got to have, and they got, 35 analysts. I would like to see more analysts say, yes, I like the CEO, and he can make money. He can make this profitable or more profitable. They're profitable now. And I like the concept, but we got to get it on sale. It's just too expensive at this point in time.
Yeah, and the interesting thing about it this week, it got a small pop after they announced a dividend increase from 61 cents to 62 cents. So,
oh, wow. Let's get it right now. That's a more penny per, is that per year or per quarter?
Per quarter. So you get 4 pennies per year.
4 pennies per year. That's a buy.
Oh, actually, who uses pennies nowadays? But yeah, I know. But I was going to say, too, I mean, the other thing that I look at with Starbucks is, I think long-term that the CEO, I think if it pulls back and maybe you give it some time and it languishes further, I think there could be a buying opportunity. You just don't know. But the other big concern has been the cost of coffee beans. I know has just been crazy. I mean, that could all of a sudden flip profitability very quickly if cost of goods do turn around. But I know we talked about this, a couple of months ago. I forget when it was, but there was no positives in sight for the cost of those beans turning around.
And I think they're affected by the tariffs as well.
I believe so.
Yeah. So you got the tariffs. And again, we talk about the tariffs. They will cause inflation one time. If they don't go away, it's going to stay the same, but it's still going to hurt their profit margins. And I just don't know. Starbucks has been around for a long time. I just don't know who does not know about Starbucks, and is that kind of flipping, where like, okay, I'm kind of done with the Starbucks fad, but great service, and I still like a Starbucks now and then. I get that excitement when I see one, like, oh yeah, give me I think I like the Frappuccinos.
They got a good product.
Yeah, great product. Yeah,
great brand recognition.
Yeah, all over airports, every place. Yeah. So,